Hello, chart watchers and Decision Point faithful. Welcome to this Monday, March 21st, 2022 episode of Decision Point. We're so glad you're here. My name is Erin Swenlin from DecisionPoint.com, and I am here with my father, Carl Swenlin, and we're here to show you those charts that we think you should see and know about as you go into this week. How's everything going for you, Dad?
Good enough.
Good enough. Yes, I think I can agree with that. Good enough. All right. Yeah, the market's been sort of calm in a way, if you want to say that, as far as how it closed today. We're going to take a closer look at those charts. But before we do, I did want to let everybody know that there will not be a Decision Point show on March 28th. I will be on vacation. Definitely needed right now. And let's talk about what we're going to talk about. We're going to look at the market overview. Carl's going to go through all of our indicators. I'm going to pick it up from there. We're going to do a sector overview. What I thought I would do is basically kind of mimic what I do on Fridays in my subscriber-only Diamond Mine. At the end of that trading room, I go through all of the sectors. We pick out the ones that look good. I pick out a sector to watch. We dive in, find an industry group to watch, and then we pick out some diamonds from that industry group. So I'll be doing that real time for you. You'll get to see how I do the drill down, and something that you can certainly do as well. All right, before we do show some charts, I do want to remind everyone, as I was talking about, I do a free trading room on Mondays at noon. It's free to register, sign up for our free newsletter, and you'll get information on how to register. But there's also a ad for the trading room on our homepage at DecisionPoint.com. And if you just click on that, you will be in business and registered for our trading room. It is recurring, so you only have to register once.
Because you won't be there next week, right?
I will not be there next week. You're absolutely correct. And for those who are Diamond subscribers, I think you are aware, but there will be no reports next week and no Diamond Mine. So we'll take care of you later for that. So here is our sector scoreboard. I'm wondering if this is actually up to date now that I look at it.
It's not.
It's not. We have some buy signals. Yes.
Yeah.
We have lots of buy signals. So
healthcare is wrong.
It is what it is. But yes, we do have some more intermediate term trend model buy signals. For example, I know XLF certainly has one, and I believe materials has one. So we'll talk a little bit more about that when we dive in and look at those sector charts. But let's go ahead and look at those charts. And I'm going to have you take the screen, Dad, and you can start us off.
All right. Okay, that is not what I want. There we go. Last week, I have to correct something I said last week. I was talking about how long-term investing, it's always best when the market goes up on a long-term, of course. But I was saying that if you had bought Chevron down here in the 03, 02, 03, that at that, with that cost basis and this current dividend, you would have about a 30% return per year on that. That was a rookie mistake and wrong, you know, and always remember that if it sounds too good to be true, it's too good to be true. So what we need to do with that is take into account the, when dividends are paid, the charts, the data is adjusted downward to account for that dividend. And therefore, your cost basis is going to be different than before that adjustment than it would have been after. So right here is the 03, 02 area that we would have wanted to buy into at 64.50 is the unadjusted price for there. Now, there was a split after that bottom, a 2-for-1 split, and you have to account for that and divide that cost basis by 2. So the cost basis, if you had gotten there, would have been $32.25 a share, and which ends up with a close to a 17% dividend. That's pretty good, but not astoundingly brilliant.
As we made it out to be last time. Still very good, obviously, if you bought at 64 and
Right.
at 32.25. Certainly now that it's up at 164, you'd be pretty happy.
Now, the way you get that is, notice the symbol has got an underscore in front of the symbol. So that's the way it strips out the dividend adjustments. And those are, incidentally, these notations, which you can't read in this, but a shorter term, you would be able to see the quarterly dividend paid. But that's put on there when you select events on your overlays. And unfortunately, it also puts in the splits and doesn't allow you to take them out. So you have to, it would be rather complicated on many stocks that have these numerous splits along the way to work back and figure out what your cost basis would have been. Okay, so moving on to the market today, we had about as good a day as you could expect. There was some pullback, but basically there's virtually no change on the close. So we've had 4 good days. If we were a little shaky condition here, we would have pulled back more, I think. It's still not too late for that to happen. But at this point, you'd have to say the market is not acting very bearish right now. Notice we have hit the upper band on our reverse scale VIX, and that is oversold in terms of this chart.
Yeah, and one thing I would note, because I've been talking about it with subscribers on that VIX, normally when we get that puncture of the upper band, we are looking for a turn back down, because on our inverted scale, of course, that's an overbought reading. But one of the things, if you notice, is that the current reading, while it has punctured that upper band, is still pretty high in comparison to where we've seen it before. So I think that there's still a possibility that VIX could move even lower as far as its reading.
As numerical reading, you mean?
Yes.
Not the inverted reading. Yeah, I still think in terms of just mechanical interpretation, when it hits that band, it is overbought, and you should just be looking out for a reversal. Here you see another point where that happened, and it took some days before it finally started rolling over. Here again, here. So it's not an absolute return on the very dime.
Right.
Let's see what the AD lines look like for today. Just a tweak down, that's all. New highs and new lows are expanding. This is really a reverse divergence. You have this high price here and a higher price, and you get a lower new highs band at this point. Silver Cross Index is moving higher on the 500, the 400, and the 600. It's still way low, and you could say it's oversold and has plenty of room to move up. Something I noticed on this chart today, this is the relative strength between the equal weighted RSP and the SPY, which is cap weighted. And normally what happens is at the beginning of up moves, the RSP the equal weighted index is stronger than the cap weighted on the initiation, on the first part of up moves, maybe the first half. And at the end of the up moves, they become, they start fading because money start moving into strictly the large cap stocks. So right now, what we've had here, and big, by the way, yes, going down, they tend to be weaker than the large cap stocks. They move down a lot faster when the loose market goes down. But it's totally reversed here. We've had on this down on the S&P 500, we've got a relative strength of the RSP getting stronger. Now on this new uptick here, RSP is getting weaker. So it's acting out of character, and frankly, I don't know what to make of it at this point, but it's something to keep in the back of your mind. On the monthly, I was noticing that it looks like the monthly PMO is flattening out and might be getting ready to turn up, but that's why we have the Zoom thumbnail chart. Let's look at that. No, it's still heading down towards the signal line, and it's not final until the end of this month, but right now it still looks like it's heading lower. A climax assessment today, I don't see any climax activity. We've got just the SPX total volume is equal to the 1 year daily average. We've had a lot of climactic activity in here. We've had 3 upside climaxes, an initiation, and 2 exhaustion climaxes. It's not exhausting yet, is it?
Doesn't look like it.
Our short-term indicators. Okay, now this is getting definitely overbought, and it tends to get overbought ahead of the tops. So here's a good example. Here's an excellent example, and so we still could go a few more days before we get an actual price top. But for this short-term indicator, these are oversold as well, bought as well, overbought. We should be expecting a pullback of some kind. On our intermediate term indicators, we're moving up, but still below the 0 line on these. And that overbought on these could be a lot lower than what we've seen up to this all-time high. So notice that this one is not updated yet today, but it's already in an overbought condition. Looking at Bitcoin, they've got a problem today on the volume. That it's not factored properly. It's some kind of problem. They started talking about it early this morning. I didn't mention, yes, the still moving sideways. We had this head and shoulders top. There's the neckline. Go back to the neckline. I was moving sideways. It's over. Stochastics are overbought. The dollar index is consolidating above this line, and possibly getting stronger. I'm not sure, but right now I'm hoping that gold is going to overcome that. There's and today it's broken down from this rising trend line, and it's been consolidating below it. This is a flaggish, maybe a reverse flag-ish kind of formation, and it could even go lower. I would look for it to definitely get support on this line. Oil getting strong again. It got way out of above the grade there and had to correct back, but I just don't see any. I don't see any other alternative that it's going to go higher. T-bills, I'm sorry, T-bonds, still heading lower. And I think that's a lock. It's going to keep going lower because, let's face it, interest rates are going up.
Exactly.
Here's the 10-year on-year yield.
Wow.
The new highs for the year.
Mm.
And I think that
covers it, or you've got the 30-year?
I got the 30-year mortgage, and you see that's just going higher and higher. I think I'll leave it at that.
Yeah. Right. No, that's certainly something to consider. It seems like people are finally talking about it, though.
Yeah, I don't know if you read that Mullen article.
Yeah, actually, I did.
Yeah, and he's saying that this time is nothing like it was in 05, through 09. He says it because they've been
more discriminating on how they loan the money.
Well, the subprime loans were the problem, and at that time, but I disagree. I mean, yes, I agree that is not an issue right now, but the problem is real estate is through the roof, and people are getting squeezed as the interest rates go up. They are able to afford a smaller loan, and the kids get smaller and smaller. We're down 17% from what it was at this point. That you can afford 17% less of a loan than you could afford down here.
Yeah, it's that eventually that will affect the home prices, I would think.
Absolutely. I mean, like I say, what do they say? The history doesn't repeat itself; it rhymes.
Yes, it often rhymes. All right, so let's jump on in. I'm going to do some sector analysis here and give you kind of an overview of what I'm seeing. I'll pop into the daily RRG. We'll look at that. Then we will delve into a particular sector that might look interesting right now and move forward from there, find an industry group, and then we'll look at a few stocks. We'll see how far I get. I'm not going to promise I can get all the way through, but let's start with a candle glance of all of the sectors. This gives you a really great overview of what the strength is, price patterns, momentum. And right now, I mean, we do have all of the sectors with positive momentum. The difference we have that I'm watching is where that 50-day EMA is in relation to the 200-day EMA. We often talk about when you get that death cross of the 50 and 200, that the stock really is in a bear market configuration. Maybe it's not down 20%, but it's certainly now got a bearish bias. So we have to always keep that in mind. With that, I don't really want to look at a sector where price is either below the 50 or there's a huge margin between the 50 and the 200. So immediately we can start canceling out just a few of these with XLC number one on that list and XLY probably the next on that list. Technology certainly showing strength in the prior rally, but you can see it was down slightly today as the market cooled. So really technology, discretionary, they've really been the ones that have led this rally going forward. But I would be just very careful with those areas, given that they are right now struggling against their 50 and 200-day EMAs. So that is something to keep in mind, even though we have momentum pretty much shooting straight up. So now what are we looking for? Well, I don't like this one. Utilities is the momentum is starting to flatten out. So I'm not happy with that. Energy, I think looks really interesting. And I'm not going to talk about energy mainly because number one, it's been so strong and everybody is now seeing that and they're getting back in. But I would say after this pullback in energy, I think we're pretty safe to say that we're going to see energy begin to move back up, and look for those stocks where you've got those pullbacks and then the corresponding bounce off of those support levels of the 20 and 50-day EMAs. And right now, oil services, exploration, production, pretty much most of those energy sectors are looking pretty good right now. We have new momentum on staples, but again, still in a declining trend. So I'm not so excited about looking at that one. So now we've pretty much taken out this top row. And again, I'm not saying that energy isn't good right now. I'm just not going to concentrate on it because I feel like that horse has been beaten lately in the media. I think we all know what's going on over there. Financials, I like this breakout above the 50-day EMA, and I think that we're looking good here on that PMO. But when I compare this one just to healthcare next to it, we have a nice breakout that's happened here. We have a PMO that's now above zero. If you look at all of these others, except for utilities and energy, the PMO is in negative territory. So I like the difference here. We also have a brand new silver cross of the 20 and 50-day EMAs. I did write about healthcare in Chart Watchers this past weekend. You can go ahead and look up Chart Watchers blog on StockCharts.com, and you'll find my article about healthcare. XLI, I think, is looking very interesting right now. It's just now poking above this area of overhead resistance. So I think XLI might be an interesting one to look at. Materials starting to recover after pretty much pulling back. Once gold started to get started, still took materials a little bit longer to get the engine rolling because obviously there's more to materials than mining and metals. So we're seeing a nice move in materials, but not quite above overhead resistance just yet. Real estate looking very interesting, but with mortgage rates, I know a lot of people are talking home builders right now, which is in discretionary, of course, but I'm just a little bit, I don't know. I don't trust real estate right now in that sector, but certainly an interesting look. We have what looks like possibly a reverse head and shoulders here. Technology, as I said, breaking above that 50 and 200, but not quite there. And then utilities, that fading momentum. So really, when it comes down to it, I have to say I really am looking at healthcare and industrials. Since I did go over healthcare this weekend in there, let's look a little bit more at the industrials under the hood. And let's see if we can kind of concentrate there. I haven't run some scans yet, so we'll see what happens when we get there. All right. So again, we noticed that we've got this breakout occurring right now on XLI. The PMO isn't positive, but it is less than 1/10 of a point away from being positive. Silver Cross is moving up nicely. Now, these participation numbers are actually from Friday. We don't have those in just yet. We've seen that the industrials aren't performing quite as well against the S&P. So now I'm thinking, maybe I do need to go back to healthcare or materials, but let's just stick with industrials for now because participation has increased quite a bit, enough so that we have a nice short-term bullish bias. And what I mean by that is we have more stocks above a higher percentage of stocks above their 20 and 50-day EMAs in comparison to the Silver Cross. And the reason that I look at that as a bullish bias is that when you have price above both the 20 and the 50-day EMAs, both of those are going to start to tend toward where price is, and you'll more than likely see a Silver Cross appear. And so we have a really good chance that the Silver Cross index will continue higher as it measures how many stocks have their 20-day EMA above their 50. The Golden Cross is trying to bottom here on industrials. We don't quite have that happening just yet. But again, we have pretty good participation of stocks above both their 50 and 200. Same thought process there. So anyway, stochastics are above 80. And with stochastics, you honestly kind of want them to be above 80 and stay above 80, because typically when that happens, you have internal strength. And you can see right back here where that was occurring as stochastics were oscillating above 80. So once you get above 80, usually that's good. You just want it to stay there. The minute you start seeing it tip over and touching the 80 line or moving below it, that's generally time to have second thoughts about whatever you're looking at. So let's go ahead and we'll dive into industrials. I have a few minutes left here. And I'm going to go to the industry summary. And it's great. You can see all of the industry groups and then get the chart for it, all organized by sector. So we know we're going to go look at industrials. Over here, we have quite a few industry groups in here. I'm not going to have time to go through all of them. So I'm just going to be tapping as we move through, and we'll see which ones look especially good. So delivery services, looking okay, but hit a top here and are pulling back. Airlines, I think we had a fake out, breakout here. They're starting to top under the 50-day EMA. Aerospace, mostly moving sideways. Building and materials, beat down, coming up over that 20-day, but not above the 50. Defense looking very interesting. This reminds me of what's happening in oil. Big run up very quickly, pull back in response, and now we're starting to see a bounce here. I think that this might be a really interesting industry group. Of course, I'm not really happy with what's happening with those indicators just yet. Now we see indicators here in industrial suppliers, a breakout happening, stochastics rising above 80. You have the PMO hitting positive territory. So industrial suppliers does look rather interesting to me. I'm not interested. Below the 50, it's too beat down. Heavy construction is traveling mostly in a trading zone and it's near the top. Heavy construction, while it's having a great move to the upside, getting ready to hit overhead resistance. So I think our upside potential is limited. Diversified industrials, now that looks pretty good, but again, under the 50. Struggling with the 50 and 200. Marine transportation, now that looks interesting after the pullback, and it is starting to head back up. Stochastics have turned up, and notice that PMO is making the turn. So marine transportation looking good. And waste and disposal, I like this little breakout here in the silver cross, so that's not too bad. Railroads, again, mostly in a trading range, and they're at the top of it. Trucking, now a new positive PMO, and we can see that 20, 50-day EMA crossover. I have only that much time, so if you recall, the good ones that I'm liking are marine transportation, trucking looks pretty darn good, and I believe it was industrial suppliers also look good. That's all we have. So I have to wish everybody good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.